28th of July, 2023, Friday, MAO with Kel once again. Guys, it's been some time. I just saw you guys, right? Now, the thing is this, I've been very busy with my app and it's going to come out by mid of August. So watch out for that. Now, BOJ, sudden move, okay, has created a mayhem this morning in the market. And of course, hedge funds are buying loads of China stocks and that basically pushed the Hang Seng up by almost 2% today. So lots of detail coming in. Let's go into that. All right. So first of all, disclaimer apply as usual, and thank you, AIMS, for the kind sponsorship. Now, one thing to note is that you remember that last MAO, I've been telling you guys about the buying into the crude oil, China, and gold. So you can see that 3 weeks ago, I was telling you guys that I'm very bullish in China market. I tell you gold will be going up, and I in fact tell you that crude likely will be going up too. And incredibly, all this has happened. All right, but of course, the one that's not really to the market is still gold. I'll talk about it later. So let's review what happened last night. Okay, now Dow Jones down by 237 points, Nasdaq down by 34, S&P down by 29. Okay, so what is the ongoing? We have 13 days of rally. Oh my goodness, 13 days. Historically, is the highest, the longest run is 14 days, and that happened nearly more than 100 years ago, apparently. All right, so the thing is this right now, right? This is really incredible. For the Dow, the 200 points is pretty normal. It finally ran out of steam. All right, so the thing is this, as you can see, is because now everybody believed that the economy have dodged a recession. For some reason, people are believing that there's no more recession. Well, basically, it's because the GDP report came out that is at 2.6% for the second quarter. Now, this is really amazing, really, really amazing. I have my big question mark here itself, but again, I'll leave it there because this is really something that is not within my control here. And you can see right now, right, because the Federal Reserve have increased interest rate to the highest level in 22 years, okay? And with that, we should have actually have a very incredible up movement on the unemployment, but these numbers have been staying low, though it's creeping up. All this doesn't make sense for Economic 101. So all I can say is this, guys, if someone is trying to massage the numbers in a way to make things easier, better, well, we don't follow through. If the market want to buy, we just have to follow through. But the thing is this, if the market starts to sell, things can get very, very bad because you can see right now, right? This is interesting here itself, right? This is quite historic. Let me bring to you, yeah? The Dow longest ever winning streak was 14 sessions set in 1897, okay? Now, remember, Dow Jones was created in 1896. That's 1 year later, okay? So that was a time whereby the market was still very raw, and that's why that was the longest ever streak. Okay, this is something that into history, yeah? So although that is where this that's when Queen Victoria still sat on her throne, and a year after the Dow was created, as mentioned again, okay? Now, back then, the Dow Jones have only 12 stocks. Now it's 30 stocks, okay? So with all this information right now, right, I'll tell you this. The Fear and Greed Index now has pulled back a little bit. So to some, they find that this is a buying opportunity. To some, they think that this is going to be coming down because we've seen this before, that when the market basically get overstretched, okay, there will be a pullback, something like this. So where we are right now, if we draw a triangle, well, we have this pullback. So what do you think, guys? Let me know in the comment box if you think that the market will come down or you think that there's still further upside to go. But the more important thing is this right now, right? We have a very interesting Wall Street view here itself. Now, basically, okay, let me bring you the chart. It'll be easier for us to understand this. Okay, let me bring it to you now. Okay, so this is the Fed Watch 2, and you can see right now for next month, September, the market is basically expecting the rate to stay the same. Now, we just have a rate hike a couple of days ago, so they're expecting the one in September, it should be the same because now it's at 5.5, and now the market is looking at it to stay status quo for September. Now, only 20% is looking at a rate hike. Only 20%, yeah. But the interesting thing is this, if you look at November, you see that actually, right, the market have a 26.5% expecting another rate hike, but only in November. So they expect the September is to skip again, to pause again, then another hike. This is going to be very, very interesting. And of course, some people looking at it may even go to, if there's going to be two hikes instead in this September and November, that's only 2.2%. Now, basically, you can see after that itself, right? Everyone still expect it to stay at the same rate right now. okay, 7%. And then again, there's some people looking at the rate cut as far as near as December. So to me, I don't buy December thing, but I kind of believe that by November itself, right, we will see this 5.75 to 6. All right, so I'm basically at 2%. Now, why do I say that? Because you can see from Jerome Powell's speech during the FOMC meeting, he's pretty clear that there should be another rate hike in September. So I can't see why the market is doing that right now. And of course, more important thing is this, we saw the BOJ sudden move today. Now, the yen swing after BOJ make adjustment to the yield curve control. Now, this is a very big move for it. It's because they really wants to stop letting people take some money from them in a way. So right now, right, this is alter the policy amid the elevated inflation and also improve the wage growth in Japan. Now, one thing that this happened is right, is trying to target the 10-year bond yield at 0%, but its 0.5 ceiling on yield movement was a reference point, not a rigid limit. So in short itself, right, they're trying to basically restrain people from coming in. And when that really happened, that means that people who've been borrowing the money itself from the yen, from BOJ, this could be some issue here. So that's the reason why this is something big. And of course, did the market react? Of course it did. The yen exploded upwards all the way to 140.80. Then after that, it shot right down. So my indicator says that there'll be resistance at 140.83. It really happened. And of course, my indicator tells me that there'll be some support at 138.52, and indeed it really happened. So all this information was clearly, all right, what they call targeted by my system itself. So if you have traded them, you would have actually caught this wave, yeah? And of course, did the Nikkei got reacted? Yes, of course, the Nikkei initially pumped up all the way. The buying came in very strongly. Then after that itself, right, you can see the market just pulled back all the way, came down, hit my KCB 32.012 before rebounding. So all these numbers you see on screen, all these are available on my TWB indicators. Pretty cool, right? All right, so other than that itself, right, we also saw today Hong Kong China market zooming up, right? What happened? Because hedge funds rushed to buy China stocks on the economy stimulus prospect, apparently. So it seems that right now the Chinese government is looking to stimulate economy. And we all know that they've been doing this meeting for somehow about 2 months ago, they've been called for this meeting. And of course, what to expect will be upside. So that's the reason why I'm kind of bullish with this Chinese market. Although I expect it happening in the fourth quarter, but I can see it's happening right now. So guys, remember this. When the government wants to stimulate the economy, and it really happened with funds coming in as well, right? You can see the funds are coming in. This is going to run. So if you have missed the boat, wait for a while, let it pull back. I believe that you can buy it again, all right? So you look at the chart right now. This is the China A50. You can see that there's a very strong base support at 12400 level for quite a while already. And then after that, today, it broke the 200-day moving average. Now, the last time we saw this, it couldn't stay above it. So today, pretty strong. And of course, with funds coming in at the same time, covered by Bloomberg and Reuters. So I strongly believe that we will see the eventual target. So maybe a pullback a little bit first before going up again. So 14,000 is my target for next year. Okay, but I expect a bit of pullback first. I don't think this will run out immediately, but my target is 14,000 by next year itself. So watch out for this. All right, this is going to be a very big, massive move. Yeah. Now you can see from my own indicator, my TWB indicator, you can see that the boys have been coming in the last few days. The indicator has turned into buying momentum. And in fact, itself, since 2 months ago, we already know that the Chinese market has some buying. So every time when the Chinese market pulls back, well, you'll be telling students to look to buy. And you can see that every wave itself is actually a good time for buying. So if you have missed the run, let it pull back and then go for it again, because this should be going up to my 14,000 target. Yeah. So if you want my indicator, it's all right. Join my preview tomorrow. It's going to be very, very fun for tomorrow. Yeah. Okay, so this is the crude oil. Now, we've been telling crude oil will be going up, and I tell you this, if crude oil continue to go higher, the big problem is that inflation will follow through. This is something that we all know. Now, we all know that now crude oil is now trading basically back to April, May period. That means that all the selling by White House seemingly is pointless and useless. And of course, from the look at it, it has crossed the 200-day moving average, which is something important because the last time it did that, it fell and it pulls back. But this time around, after it went above the 200-day average, the market did not react. And in fact, itself, I believe that it's going to go higher. And I believe that we'll see $90 by the end of this year itself, $90. And if that happens, take a look, guys. We're going back all the way to last year November price, and if that really happened, I think that Biden will have some issues, right? Don't you think about it? So that is why I think that it's time to buy some crude oil at all pullback. Yeah, now you buy is chasing it, so be careful. So for my own indicator, you can see from my TWB indicator, pretty cool, right? 1 month ago, we know that the market will be going up soon. So you can see that. And the BOJ indicator confirms the buy. And that's why over the last 2 weeks, 3 weeks, we've been calling for buy on crude oil. Every time we've been calling for buy. So while many people are looking at crude oil to go down, I suspect that we'll see the $90 mark probably by end of this year. So traders, do watch out for this. This is going to be very, very powerful move. And of course, when that happened, right, I kind of hope that this gold will follow through. In fact, now gold has been sideways because of the US dollar have been going up because of the interest rate hiking and stuff like that. But you can see that gold has a very strong, firm movement when you touch the moving average MA 200. So I suspect that if gold ever come down to 200-day average, right, it's time to buy, because I believe that gold will go to my target I've been waiting for a long, long time. 2218. Now, I don't know when would it happen. Probably next year when the dollars have to come down due to the pivoting by the Federal Reserve, if they do that. But I believe that go around 1880 to 1900 will be a very good time to buy some gold. All right. Now, recently the volume has dropped quite a fair bit. Yeah. So this is something that I kind of worried. So if gold do pull back below 1900 and start to stay and hover around the 200-day average or at 1880, right, maybe that's time to buy some gold. What do you think? Let me know in the comment box. Yeah. All right. So with that, you can see from my gold chart, right, my own indicator, you can see pretty clear that the boys are actually selling, although the buying momentum is still there, but it doesn't have the the confirmation from the boys indicator. So if you ask me, right, I think gold may have to come down a bit more before we can find a base out, right? So I'm not too in fact, it's out right. 1985 is my this KFC level. So unless the gold can go above 1985, if not, right, by staying below 1985, usually, or what can I say, that most of the time it will be pressured downside. All right, the next big movement will be in September 28. Okay, watch out for this, the next KFC level, September 28. Okay. All right, so to wrap it up itself, right, because really there's nothing much we can talk about just to follow the market. This is the Dow index, and let's take a look at Dow right now. And the Dow yesterday did a BMB, so which means that the upside potential could be as high as 36,217. The downside potential is 34,748. Okay, so how do we look at this? Oh, very simple. If the market can stay above, okay, cross 35,500, I can be quite sure that we may see 36,217 in the coming weeks. Okay. But at the same time, if the Dow goes below 35,235 and stay below it, then the downside could really fetch all the way down to 34,748, because if you realize this, the MA30 is there. So usually the market really want to go further, they may purposely pull back to the MA moving average first to stall there, then goes up. But like I say again, we have two BMB, all right? Two BMB, there's one yesterday and a day before. Now, two BMB at the same time is not a very good sign, because BMB stands for big movement bar, and to have two of them at the same time is not a good sign. So guys, stay very, very close to the screen, watch the market, because right, I believe that there will be a very big one coming in. This could be a 500 to a 1,000 point movement. Now, up or downside, we let the market decide. But at least for now itself, the market seems to be still on the buy side. But of course, when everybody on the same side, you just need to be careful, okay? So there's something that I want to share with you. I'll tell you more in details during tomorrow's review, right? That will be all for today. Thank you very much. See you then. Bye-bye.